All right, this will set up your trading for for Monday, July 15th. This is Mike O'Connor, and I use Chaikin Analytics for iPad as my primary tool for trend trading the market using intermediate term 3 to 6 month strategies for finding the best bullish and bearish opportunities. We follow some very simple rules. We like to trade in strong markets. We like to pick the best sectors and go after strong industry groups within those sectors, and then use the Chaikin Analytics proprietary model to find the 20-factor power gauge rating to determine the best of the best, great stocks that are in the best industry groups from strong sectors, and then we use trading signals to get into the market at the right time. Chaikin Analytics for iPad provides you all the tools you need to really distill the market down to just a few data points so that you can quickly make a decision every day. So if you're like me and you have a day job, you don't have the time or the patience to look at charts on an hourly basis during the trading day, this system is for you. Let me walk you through my systematic approach for determining what, if anything, I'm going to trade the next trading day. This is an end-of-day trading system. The signals are available to you before the beginning of each trading day from the software. So if I go over to the web, there's a couple of things that I do without using Chaikin Analytics that kind of sets my trading bias up. The first thing I like to look for always is market direction. What are we doing? Well, on the very long term, we're broken out of an upper trading range. We've broken through resistance. We've recently retested old resistance now as new support with a nice bounce on a monthly basis. So my long-term posture is incredibly bullish. As we kind of drill down into what's going on trend-wise, we've been following this diagonal trend line since really the lows of this past November, and we've had a little bit of a hiccup recently where the market has gone sideways, but we are still absolutely in an uptrend on an intermediate to long-term basis. And finally, if we look at the daily trend, which is where I like to make my trading decisions, you can see that we've pulled down and we've had this incredible rally, and we're right now hitting our head on resistance. There's a bunch of economic data that's going to come out in the next 24 hours, particularly from China. We've had the Fed heads speak about the easy money policy that they intend to pursue for the foreseeable future. So we're not sure whether or not we're going to break out from this channel or go sideways. So my posture is bullish to neutral, and that means that I'm going to risk less on any of the trades that I take. One of the things that I like to do is look at sectors to determine where the strength of the market is, and I look at it on 2 time frames, the 6-month time frame, where we kind of check to see what is outperforming the growth rate of the S&P 500, because strong sectors are where institutions are putting their money, and we like to put our money to work because we know that we have the wind at our back when their money is going into the sectors. And the sectors really haven't changed that much, though there is a bit of a rotation going on. We have XLY, consumer discretionary, also known as cyclical category, which has led the pack on the 6-month basis, along with healthcare and financials. Recent strength has been in consumer staples and also in industrials. When we look at the 3-month relative strength performance of different sectors that make up the S&P, we can see that cyclicals or consumer discretionary leads the pack, along with financials and industrials. So we are sort of seeing a rotation, because you can also see technology start to bubble its head up there. We're seeing a rotation from much more defensive yield-based securities into the more high-flying sectors like industrials and technology, where the beta rating on the stocks is significantly higher. So we're going to focus on the sectors that have outperformed on the 3 and 6 month basis. We do that work outside of Chaikin Analytics for iPad, but once we get back into the tool itself, one of the things that I like to do is look at the watch list of each of the ETFs that represent the major trading sectors. I don't have it displayed here, but the XLY, or consumer discretionary, which is also known as consumer cyclicals, that is continuing to lead the market. And healthcare would be the number 2 best performing ETF, where the Chaikin system rates all the individual stocks that make up the ETF and then ranks the ETF stock holdings on a relative basis compared to all of the other sectors of the economy. And you can see, well, You don't see it here. XLY, XLV, and XLK technology now starting to lead the pack along with industrial. So that's a bit of a rotation into more quote-unquote high-flying names. And those are the places where we want to look for trading signals. And so as an example, I actually went through the top 3 performing sectors earlier today and found only one buy signal, and this was for Johnson & Johnson. It has a bullish, but not a very bullish power gauge rating. It's still rated at near the top. There's probably about 6 rows of different securities that make up the healthcare space, and Johnson & Johnson is looking pretty good. This is one of those buy signals that I don't like to take because it means you're really kind of chasing performance. So it's kind of a cautionary trail. It's called it's called a breakout buy. And a lot of things have to be going in the stock's favor in order for it to get a breakout buy rating. And obviously the stock has run up, and it's past the upper volatility band, which means that its recent performance is at least 1 standard deviation better than what we normally see. And then we look at the other things that have to be green, which include the money flow, Chaikin money flow, the relative strength, which is how the security is performed against the S&P 500 on a 6-month basis, and then the Chaikin power gauge rating, which is a combination of technical and fundamental data. All have to be bullish, and you can see that's the case here. So we have a stock with strong momentum. We have a stock with green lights in the 3 key areas that it needs to be in, and again, those are stock breaking out of the upper band, which means a more significant than 1 standard deviation move over the past 4 weeks. Stock has been outperforming the market, meaning the relative strength score is green. Money flow is strong, and the Chaikin money flow indicator on your chart is green, and the power gauge rating is bullish. So if all of those things are true, you can enter a stock based on a momentum trade. But be forewarned, there's one other thing that I always do. If you were to consider taking a trade like this, you want to make sure that there is no headline risk. And one of the things that I always check is when do earnings come out? And so when I plug in Johnson & Johnson, I see that there will be an earnings announcement on July 16th. And if we scroll down, we can see right here that before the market open on Tuesday, there'll be an earning announcement, which means there's a lot of headline risk. That being the only entry signal, and there being headline risk, my rules do not allow me to take that trade. It's just too risky given all of the other parameters. And so if I were to go back in here and kind of summarize things, that market conditions are bullish, but we are at resistance, and there's a possibility we go sideways for a little while from here as economic data and Fed policy seem to still be somewhat up in the air. So I'm going to take less risk, about 0.5 percentage point. Here we do see that healthcare is one of 3 or 4 sectors outperforming the S&P 500 ETF, known as the Spiders, on a 3 and 6 month basis. We know that Johnson & Johnson is in a strong industry group with a with only a bullish power gauge rating. So it wasn't very bullish, it was bullish. That's the other strike against it. We do have strong technicals. We got a momentum buy signal today, which was a breakout buy signal, and but earnings were in the next 30 days, so this is not a trade that I would take. And of the trading signals that were indicated by the Chaikin software, I'm not going to trade tomorrow. So the system keeps you out of bad stocks. It will also keep you from making ill-timed trading decisions, and that's the beauty of it. If you go to my Facebook page, you can get a free trial, and there's a link there, and you can play with this for 2 weeks. We know that we've gone over this before, that when you backtest a portfolio of stocks and you emphasize in your portfolio very bullish stocks, and you enter with appropriate trading signals, that you can have significant outperformance relative to the market. And that's why I follow this system pretty much religiously. And sometimes that means taking no trades, and that's what I plan to do tomorrow. Sit on my hands. We'll take another look in a day or so. Thanks very much for watching. Have a good night.